Recording. All right. Hopefully the audio is working here. Good morning or good afternoon. Good night, everyone. Today we are going to be looking at some commodities, some crypto, a little bit of everything, mainly looking at relative value. The purpose of this channel is to not only compare assets to its value in dollars, but in its value versus other assets. So what that means is gold versus silver, gold versus the Dow, um, silver miners versus silver miner ETFs, Bitcoin versus whatever. We're comparing different assets, not just comparing them versus dollars, but the main thing is to compare them versus each other because we don't want to be in an asset that is going up that is not going up as much as other assets. We want to be in the best assets. So that's the purpose of this relative edge um, um, YouTube account. So with here today we got Rich. It is Sunday, February 22nd, 2026.
Yep.
Around six.
AKA trade the setup.
Yes. AKA trade the setup. Rich just
Yeah.
booked a nice profit on his silver long. He got into a trade with me on Friday on silver and played out nicely. Nice 20+% profit move. But
Yeah, let's talk about that because um Jabari, AKA JB, actually got in earlier than me. And I'm glad that JB that you brought it to my attention. And being that I don't have a setup with the equities account, I'm trading crypto, I was able to see that I was able to trade XAG in on a Mexi account, which is silver. And I took a closer look at it because of you, JB. And what I saw was on the 1 hour. If I reset this, let's see here. What I saw was that's the 1 hour. I'll go to the 4 hour. Sorry for the messy charts here. I saw, let's go to 1 hour, a head and shoulders
yep, in
form
inverse head and shoulders, right?
inverse head and shoulders. Now I did an entry at 5x leverage of my entire trading account on an A plus trade, which this looks to be because technical analysis was saying that this is in silver overall. Technical analysis and AI technical analysis was very bullish. And usually for A plus trade like this, I do a 10x. But being in, I got in late, I reduced it to a 5x. I actually missed it. I actually missed it twice. I missed the entry on breaking the neckline, which is the yellow bar right here. And I'll say, okay, if I do a retest, I'll get in. I missed it again on, let's say, this bar here. It moved back, but I missed it again. So I got in on the orange part. This is my entry, and it was 1 to 3.4 risk reward ratio. The measured move was at what did I get in at 81.28. The measured move was 87.50, and as it proceeded up, I moved stops. So that's my entry. Stop loss was 79.42. I moved the old stop in profit 11.68%. And then recently, because reviewing it about an hour ago, about an hour before market opened Sunday at 6 p.m. for all commodities, precious metals, and such. I moved it a little bit tight in hindsight, because what I'm looking at is actually leverage liquidity on this liquidity heat map that we have. in crypto
Mm-hmm.
before then. So back here, I saw is in the yellow that it was going to go to at least $86.
Mm-hmm.
However, at that time, if I switch back to the chart, I moved my stop up to uh, into 21, 46% profit at 84.78. And as you can see, 84, let me put this back here. As you can see, when I hover over this bar pulled back to 84.78 and moved up right to my leverage liquidity right there, which we can see. Let
That
me
was a
increase
crazy bar.
this.
That opening bar, man. It
Yeah,
made
very
sure to
volatile.
it made
It
sure to
hit it.
touch each level.
Exactly. It hit the leverage liquidity shorts. Um, for those that don't know, the leverage liquidity that you see in the liquidity heat map, market makers make the most money when they liquidate longs and shorts. And
Mm-hmm.
it's illustrated here in the brighter yellow. That's the most liquidity. It actually tells you how much money. Like this is $2.12 million at $86.11. So, and there's some below, so there may be some pullback and some volatility, but we'll see as trading proceeds. Yeah, yeah.
Yes.
So that was my trade. I don't mind that because compound interest on the overall account adds up. It adds up.
Mm-hmm.
Yeah, my personal goal is to do 100% every month. So my so I'm looking at doing 30% and then for 1 week, and then the preceding 3 weeks is to do an average of 15% a week, and then that'll be 100% compounded for the month.
Very
So
nice. Very
yeah,
nice.
I like
Perfect.
to know. I'd like to know where you got in and what JB, where you got in and your trade on silver. You want to take it away and share your screen? Are you able
Yeah.
to do that?
Yeah. Let me.
Or I can do mine. Either way.
Yeah. Let me. I'll come in and share my screen so I can kind of give you guys an idea of what
Yeah.
went through my mind here. Let me
All
and
right.
forgive us. This is our first stream, so just
Okay.
bear with us on
Yeah.
this one.
We're virgins on this.
we're,
Popping out cherries,
we're
popping out
learning.
cherry, you
We're learning.
know.
Uh,
Sorry for the vulgar language if that's vulgar, sir. Excuse.
oh no, no, you're fine.
For the audience, that's for the audience. Yeah, we're gonna make this really, really, really friendly. We're gonna have a nice, light banter. We're just conversating here, and for those that can see a value, hopefully you will see a value in this. And feel free to comment and ask questions, and we'll get back to you as soon as we can.
Yes, yes. And Rich, just let me know um, if you can see my screen.
It's coming up. It
I'm
was.
going
Sorry for a
to try
second.
one more time to share it. Um, let's go with this.
And just for the audience,
Can you
um,
see this, Rich? Okay, yeah, you should be able
oh
to.
yeah, yeah.
Okay, what were you gonna say?
Oh, I just want to basically introduce myself a little bit more. I'm actually close to very close to retirement age. Just got laid off, and I plan to trade for and not go back to work. And I traded before off and on crypto, equities, options. Been in a hedge fund and such. That was about 12 years ago. Life happens, and I'm a lot different now, and got a great trading plan, and Always good to have a good trading partner, and got one now with JB.
Yes, sir. Yes, sir. So, some little background on me. Um, I'm 26 years old, going on 27. Been trading since 2020. Kind of just getting my feet wet, but now I'm diving a lot deeper, getting a little bit more sophisticated, and just learning every day. I make mistakes and I make gains, and we learn from
Mhm.
them. But the purpose of this channel is to kind of get other people to learn from my mistakes and maybe spread some knowledge that I wish I would have knew when I first started. So
Mhm.
yeah, I have the confidence, a little bit more confidence now what I'm talking about, and I feel like
Mhm.
I can provide value to other people. So that's what I'm here to do, and not keep not keep all the knowledge to myself, to spread the knowledge, spread the love, because I mean, what's the point of knowing all this information if I can't help anybody else learn from it?
That's right.
So
Each one teach one.
exactly. So that's the goal here, is to help other people. And if you have any questions, just let me know. And anything I can do to improve. My whole philosophy is Kaizen, which in Japanese means continuous improvement. So that you're
Hmm.
gonna see that over the time, like I'm going to continuously improve with my this video,
Yep.
this stream, my trading. Like this is my first time here, so I bet as the videos go on, they'll get a little bit more cleaner. But it'll be nice to see for the people that start
My,
with me in the beginning,
my,
the growth.
yeah.
Yeah,
Might have to call you the Kaizen, man.
Mr. Guys, I might have to change my
Yeah.
YouTube name.
Kaizen and trade the setup.
Exactly, exactly.
Yeah. Yeah.
So
Yeah. Matter
let's.
of fact, I'm gonna do a t-shirt. I gotta do a t-shirt, man.
You got to. So
Yeah.
let's get started here. I just want to talk about a few different assets here, and kind of I'm probably gonna keep it very consistent, video by video. But the
Hmm.
main assets is gonna be the 10-year yield here, the dollar, um, the Dow Jones Gold Ratio, and then this is silver and silver miners. But the other one is going to be the gold silver ratio, which next time I will make sure to have set up beforehand so you can kind of see and to compare the relative values. So let's start out with a weekly chart on the 10-year yield. So the 10-year yield, as you know, rates have been a big problem for at least the everybody, and the
Hmm.
presidential administration wants lower rates, and we can see that in real time. We don't have to we can see what the trend is. So this is a trend
Okay.
of the 10-year yield, and I
Now, with the 10-year yield, what do you use it as a barometer for?
so I want to see basically the 10-year yield tells me a few things. It tells me the interest rates at the time and the speed that the 10-year, usually you want the rates to remain at a slow moving pace. So when you see wide acceleration in the 10-year yield, there's going to be volatility in the markets, because the market's like a steady yield rate. Um, and we want to see, for markets to go up, we need more liquidity in the system, which means that interest rates need to be lower, because lower interest rates means easy money policy, or easier money to come into existence. Think about it like this: if your buddy were to lend you money, and he said at the end $100, at the end of this year you have to give me $101. By the end of this year, I think you'd be pretty confident you can get $101 over to him. But if he charged you a 30% interest rate and said, by the end of this year, I need, instead of $101, I need $130, that might be a little bit hard to get your head around. So,
Hmm.
so in simple terms, lower interest rates are bullish, and it allow more liquidity to come into the system, because
Hmm.
basically money is cheaper. The cost of taking out money is cheaper. So it's important that we understand that as a fundamental in trading, that the 10-year yield is kind of like the daddy of the market, and you can't really gain an understanding of the market without looking at the 10-year basis note. That's kind of like the staple for most
Okay.
traders. And then,
So
yeah,
so if the 10-year yield goes up, it'll be cheaper for somebody to equities or buy equities
so it would be more
or more
expensive.
expensive.
It'd be more expensive. So think about it like this: if the 10-year
So it goes down.
yeah,
Okay.
so say you have a margin account, right? And you want to take out margin to trade. Is it going to be easier to access more money with a lower rate or a higher rate? So anyone would say a lower rate because I can basically afford to take out more money and pay a less fee. So a lower interest rate means that more money can come into the market and vice versa. Um,
Right.
so
So when the yield goes down, the interest rate goes down.
yeah, so the yields, bond yields, and bond interest and the 10-year interest rates actually move inversely correlated. So
Okay.
yes,
So when the yields go down, it's going to be more expensive. The interest rate is going to go up.
yes. So and they're yeah exactly. So they're inversely correlated.
Okay.
So that's important to keep in mind. So what we want to see is this is a 10-year basis note for
Hmm.
for equities, stock markets, in general businesses to do better in the short term. We would want interest rates to come down because that means it's an easier money policy. Higher interest rates
Right.
would mean like I would rather buy a car, go out and buy a car for my business
Yeah.
at a 5% interest rate rather than a
You may
10% interest
you
rate.
you made me think about something. So if the 10-year yield is going up, right, the interest rate is going down, and it's more of a risk on. So if you're in crypto, or let's just say Bitcoin, or use Bitcoin as an example, if it's risk on, because Bitcoin is still considered more of a risky asset than equities. So yeah, it can be piling on to Bitcoin if the setup is right. Am I on the right track?
Exactly. Yep. You got that
All right.
100% correct.
All right.
So for equities and especially crypto is even more out on the risk curve.
Mm-hmm.
What you want to see is interest rates come down because that means there's a more easier money policy, and what that is going
Mm-hmm.
to allow for is more money to come into the system, and therefore
Mm-hmm.
since crypto is kind of like the highest risk, it's going to be the most sensitive to that. So
Good.
lower interest rates should definitely affect the price of most everything, but especially crypto because it's more sensitive. Um, and
Yep.
we can also talk about that correlation to the dollar as well because they're all interconnected. But everything starts at the 10-year basis note. That is where everything derives its value from.
Yeah. A- As that was, if I may interject, that was one of the reasons why commodities was moving to the upside, especially silver that we was in as we was tracking it.
Mm-hmm.
Towards the day of Friday, uh,
Mm-hmm.
which kept me in personally in the trade. Um,
Exactly. So
yeah.
yeah, and that's important too. And one important thing we want to see, and one thing that took me a while to learn, was the idea of bullish and bearish divergences. Um,
Oh,
right,
valuable.
that is one of the first things I think any trader should learn because it would save you so much headache and it's easier to spot changes and trends essentially.
Hmm.
So, in short, I'll show you like a quick bearish divergence, meaning that um, basically when you see something happen in price, like a higher high. So, for example, this is a high right here, and then this is a higher high. That is a
Hmm.
that's a up. It's clearly an upward trend. When you're in an uptrend, you're making higher highs and higher lows. But when you're looking for a divergence here, so you want to take a peek down here at the RSI, which is the relative strength index, and you can see here that we made a lower high here and then another lower high. Although the price is going up, the strength is going down because we get a higher high, but we get a lower high here. And you can see that with bullish divergences on the opposite side in any
Right.
pretty much any chart. And it's a very good indicator to show you kind of when a trend is
Right.
changing.
Yeah, it's preparing for a trend reversal. Is that right?
Exactly, exactly. So
Excellent.
you can see here on this weekly chart, like we made a lower high here on the RSI and a higher high on the price. So that means that's a bearish divergence. That means this uptrend is now going to start going sideways until it can show another either bullish divergence or break down from its levels. Um, so I see
This
what was that?
this is interesting because let's say, for instance, you're an investor, right? And you dollar cost average in, you can actually save some money if you look at the chart and there's a bearish divergence instead of dollar cost averaging some more. It's like, oh, you know what? Let me wait for a pullback and I can get it cheaper.
Exactly, exactly,
Yeah.
100%. Yeah.
Or if you're a day trader or swing trader, you can short the market.
Mm-hmm. Mm-hmm. Because I mean, you're looking for edge. You're looking for something that tells you to get in when everyone's trying to get out, and something that tells you to get out when everyone's trying to get in. You know, because
Exactly.
you want to be the first one out the door. You know, so you can keep as much profit as possible and get the best entry prices as possible. So that bullish and bearish divergence that's critical to um, spotting changes in direction. So keep that in mind. And
Mhm.
if you see any of those, definitely spot them out. You should call them out as soon as you see them. You'll save yourself some
Mhm.
money. But so as you can see, we're in an uptrend here on rates, and now we're actually going sideways. We're forming a pennant, or you can call this a bull flag as well, when price bounces between two converging prices, two converging trend lines, an upward trend line and a downward trend line, marking the highs and the
Mhm.
lows. So it looks like this is going to converge, and what you want to look for in the RSI is when you get a bearish divergence or a bullish divergence, and then the second thing is when the RSI crosses below or above 50. So when we cross below or above 50, typically it means that there's a change of direction, whether that's going up to sideways, sideways to down, or sideways to up, whatever it is. It's a
Mhm.
change in from going above 50 and below 50 on the RSI is a very important thing to keep in mind. If you're holding an asset and you're going long, and the RSI is below 50, you might want to reconsider, because typically that means that the price is either going sideways or down. So keep that in mind for your
Mhm.
trades. Um, but yeah, so as you can see here, after October 23rd or October 2023, um, 10-year yield hit a higher high but a lower high on RSI, indicating that we're no longer in uptrend and we're going to be trading sideways. So that's good for equity markets, because the equity markets want lower interest rates. So a car doesn't just stop; it slows down before it stops, and then it
This is
turns around and then changes direction. So
this is interesting what you're showing me because there's chopped since that higher high has been chopped since that date. What date was that?
since October 23rd, 2023, and since
Oh,
then we because we got a bearish divergence, and there was actually another bearish divergence here, October 17th, a year before. It's
hmm.
almost a year before to the date.
Oh, we're going way back.
Yeah, yeah. So we got a
Yeah.
bearish divergence here, a bearish divergence here. So pretty much since this bearish divergence, the first bearish divergence, October
Hmm.
2022, right here, we pretty much went sideways. So this uptrend is,
Mm-hmm.
although we got a higher high here, I mean, it came right back down. And clearly
Mm-hmm.
prices, look, prices smack dab on where we get that first bearish divergence. So if we
Mm.
break lower here and potentially test the lower trend line, because look, we bounced here, that means this sideways horizontal pattern, which was previous in an uptrend and now is going sideways, that means we could see this turn into a downtrend, which is going to be very, very bullish for equity markets. So
Mm-hmm.
in the short term, it could cause a sell off because typically when
Oh,
rates come down really fast or move very quickly, it can cause a sell off. But what you really don't want to see is a spike in interest rates because that would cause
right.
a debt market collapse, and that's a
So
horrible thing.
if we see a spike in the yield, a drop in the 10-year yield, we're going to see a spike in the interest rates. Is that correct?
No. So the interest rates is basically the 10-year yield. The opposite would be the bonds. So bonds would
Oh,
would sell off. Bond market would sell off.
oh, my apologies. I thought they worked. I thought they worked inversely. I misunderstood.
Yes.
They work lockstep with the interest rates, the
Yeah.
10-year yield. Got it.
Yeah. So you want to watch this
So we
close.
don't want to see the 10-year yield go up. We want to see it break this pennant.
Yes. 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 So
Break support and break the pennant.
how just so we can explain this and make sure it's clear to people, how is the bond market um, relationship to interest rates? And I'm going to pull that in here so you guys can see what Gemini says. We've been using Gemini a lot
Mm.
to get
That's-
some quick answers, you know. So
yeah,
so look, yeah.
that's
So
our
they have
research partner. AI
exactly,
Gemini,
exactly.
Gemini AI is our research partner,
So the
and
relation,
trading assistant.
yeah, I love Gemini, man. I mean, also if you're not using Gemini or any type of AI platform, definitely reevaluate. It's a very, you don't want to rely on it, but it's a very good tool.
Yep,
And we're gonna be using it a lot to kind of like just see if
absolutely.
our logic makes sense. We don't want to use it to kind of
Um,
make our ideas, but kind of enhance our
Yeah,
ideas.
Gemini helped me make a little above 29% in the other day in over 24 hours.
Yes, exactly. Yeah, if you use it the right way, it could make you some serious money, which is why we're here, to make some
That's
money.
right.
So, but
The power of leverage.
yes, yes, exactly. So here's a quick thing. I just want to go through it quick, but the relationship between the bond market and interest rates is one of the most fundamental concepts in finance. Simply put, they have an inverse relationship, like I mentioned. So
Ah,
when interest rates go up, bond prices do the opposite. They go down. When interest rates go down, bond prices go up. So it's like a seesaw. Imagine two kids on a seesaw jumping on each side. As one goes
yeah.
up, the other one goes down. So when you
Audience, I'm learning this as your Jabari is actually JB is actually teaching me now.
Hey, I mean, we all learn. We all gotta learn every day, you know.
Yep.
Like I'm
Yeah.
still learning every day too, and I'm not perfect. So, but
I like that.
this is how we learn new things, you know. But yeah. So when you buy a bond, and if you guys are interested, I can go through like a more in depth video on this. Like, let me get some feedback from you guys. Whatever you guys want to learn, just let me know. But back to this. When you buy a bond, you're essentially lending money to the issuer, like a corporation or a government. In return, they promise to pay you a fixed rate of interest called the coupon rate over a set period of time, plus your original money back at the end. Because your interest payout is usually fixed, the attractiveness changes based on what the rest of the economy is doing. Um, but yeah, I mean, I don't want to go through all of this, but just remember why this matters. The relationship dictates the investors build for the portfolio. If investors expect interest rates to rise to fight inflation, they know the current bonds will lose market value. If they expect rates to drop, often during a recession, Because think about it, why would rates drop? To stimulate the economy, because the economy is doing terrible. So typically you see rates drop in a recession. Um, they might buy bonds knowing the value of the assets would rise. So if that's still confusing, let me know. We can kind of go into a little deeper. It's still, it took me a while to get my head around, but sometimes a visual explanation is good. Also, doing your own research, you know. But yeah,
Love it.
all right. So,
Yeah.
did you want to mention anything about the 10-year yield before we move to the dollar?
Oh no, I thanks for the education too. Also, you know, 10-year yield goes down, interest rates go down. Bonds work inversely.
Yep,
Bond goes up, interest rate goes down. Bond goes down, interest rate goes up.
exactly.
So
Exactly.
yeah,
So these are interest rates here. So for example, I'll overlay overlay the TLT, which is bonds, and the 10-year interest rate. That's an interest rate. Why is this taking so long? Don't know why it's not letting me overlay TLT here. What I'll do is TLT. So you can see. I wish I can overlay them so it's a little easier to see, but basically
oh okay,
these are inverse charts of each other. So let's go to
gotcha.
the 3 month chart of the bonds, and then the 3 month chart of interest rates. I don't know why this is acting slow all of a sudden, but it's loading up. One sec. Yeah,
Uh,
reload this page. Okay. Yeah, so you can see. Oh, sorry. Technical,
Bitcoin gold.
technical difficulties.
That's
Um,
right. ten
okay.
year.
So this is the 10-year yield. It's going up over time, and now it's going sideways, and then bonds, um, the opposite, going down here and now
Yeah,
going sideways. So,
yeah. That's all right.
but anyway,
So
I was wondering if I could overlay it here. Usually, oh here, yeah, there you go. I overlaid it. So the yellow line is bonds,
nice.
and the chart up here is rates, interest rates. So you can see there's a clear inverse correlation, as
Gotcha.
bonds go down, interest rates go up, and interest rates come down, bonds are going to rally. Um, so there you go.
Okay.
So the dollar is a very important thing because everything that we use is priced in dollars. At least if you're in America where I live and I was born. Um, the dollar, I love silver. It is my favorite investment, and that
Yep.
I don't think you can name an asset that's more sensitive to the dollar than silver is. I guess maybe
Yeah.
Bitcoin. Maybe Bitcoin is one of them, but
Yeah, and then thank you for introducing me to silver because you just made me 21.46% in 24 hours.
Yep, yep. I'm gonna collect my commission
I
off of
appreciate
Rich.
that.
Yeah,
Yeah.
Rich and I had a whole conversation the day before, kind of going over. Um,
Yeah. Now, FYI audience, I used to trade in a prop firm and the to you start off as a day trader, right? And experts, they consider you an expert to make an average of 1% a day. I've figured out how to mitigate my risk and extend my percentages. And as you saw earlier, I made 26.46% in one day.
which is exceptional, exceptional. So that's
Yeah.
just the power of these trades. Like If you get any ideas from what we're showing you here and you make any trades, feel free to let us know. I mean, this is all
Yeah,
educational. We're not really kind of giving investment advice here. We're kind of just showing you our thought process and what we're doing.
exactly.
So
Exactly. This is not a investment advice. This is JV says, and later in a maybe in another episode, they'll show you how to mitigate risk and extend rewards to also.
exactly, exactly. So here the U.S. dollar you can see was trading sideways for a while, but now it's in a clear uptrend. But if you zoom in a little bit, you see that there are some indications on the chart that I want to talk about that are showing that maybe the uptrend may break here, because an uptrend, there's typically a trend line you can draw on the bottom of each
Yep.
low that it was what we call support, and on the top is what we would call resistance. And I wish I could show my RSI here a little closer.
And that's weekly,
Yeah, this
right?
is a weekly. Yeah, this is a weekly chart.
Yeah. So
Um,
each bar is a week.
yeah. And sorry, I'm trying to move this so you can kind of see a little better. Kaizen. Don't worry, we'll figure this out for the next trade. Sorry, video. I'm trying to move this. Um, anyway, what I
All
see
right.
here.
You need to
Uh,
do some Kaizen on the
yeah, it's gonna be a lot of
Kaizen.
Kaizen. You're gonna see. This is my first time, so
You know
please bear
what?
with me.
Why don't you change it to daily and see what you see?
Yeah, yeah. So here, let's go to the daily chart.
Yeah, maybe it has some clarity, and then increase. Yeah, there you go.
So yeah, the daily chart is it's testing this support line, and the question is, do we bounce up and kind of hit support like we did in the past many other times, or or do we break through? Which I am in the bias in which we break through right here. But
Hmm.
there's a clear fight here. I mean, you see that there was a bounce here, and we're still holding above that trend line. So for right now, the dollar is still holding above support. But I do
Hmm.
have a lot of ideas that this may collapse soon, and the reason why is because interest rates are going down. I believe they will come down, which will make easier money, or money easier, money cheaper, um, and therefore is going to lead to more inflation. So as we increase our inflation faster than other countries,
Hmm.
our dollar loses purchasing power relative to theirs. I mean, all fiat currencies are losing purchasing power, but we're comparing our currency to other currencies.
So that's interesting because if the dollar's going down and interest rates goes up, it's cheaper to borrow. No, if interest rate well, that's a question, right? If the dollar goes down, it's cheaper to you don't get as much value in your dollar.
Mm-hmm. Yep. Yep. So I mean, although interest rates going down in the short term can be beneficial for you, in the long
Right.
term, it actually is very
Yeah.
inflationary.
L- Borrowers are going to flood the market and borrow money for the cheap rate. And in addition to not only for equities, but for um, big ticket items like real estate,
Yep. Exactly.
and maybe cars. Those are the two big ticket items in that. Well, in addition to business,
Mm-hmm.
because
Yep.
some businesses they actually survive on lending.
Yeah.
They afloat.
Yeah. Which is
Yeah.
which is
Yes.
a lot of companies are dependent on debt. I mean, I'm still in debt, and most
Right.
Americans are have some form of debt.
Yeah.
So
But you got good debt.
Yeah,
There's
yeah.
there's good debt and bad
Yeah,
debt.
there's good debt, bad debt. I'm not carrying thousands of dollars in
Yeah.
credit card debt or anything like that. Which
So
stay away from that.
debt
But
used for assets is
yes,
great, but
yes,
debt used for liabilities
exactly,
is a negative.
exactly,
You know.
exactly. So you shouldn't be
Yeah.
buying assets with a something that's gonna go up over time. You don't want to be buying like car loans aren't the best debt. If you can justify that it's gonna make you more money over time, that's a different story. But the goal is to not be paying stupid amounts of
Hmm.
interest to the banks. So, but yeah. Anyway,
Right.
I digress from that and back to the dollar. One thing I just want to show you real quick. This is a weekly chart on the dollar. Is that there is a bearish divergence present, meaning that the upward trend is likely to fail, and meaning that we may either trade sideways or down and break this trend line. And the reason why I say that is because in March 15th, March 2015, um, we got a new high here, you can see, and we got a relative high on the RSI. Um,
Hmm.
but look what happened here in January 2017. We got another high, but we actually got a lower high on the RSI. And you saw what happened for nearly from 2017 to it took to 2022, which is 5 years. It took 5 years to get a new high. So this uptrend was clearly broken here, and now even now we've hit a new high here clearly on the price. But if you look at the RSI, we got another bearish divergence. We still got a lower high than we did in March 15th. So I'm expecting the same thing to happen here as 2015 or 2016. And clearly, since then, we made a lower high here. And we can see that now, after the bearish divergence, we're getting both lower highs and lower lows on not only the price but the RSI. So I think that that to me means, and to verify that, you kind of want to zoom out and look at the term, larger charts, time frame charts. This is the
Oh,
weekly
look at
RSI,
that.
and there's a clear break in trend. Like I said, when you go below the 50 and the RSI, that means the trend is typically changed. So that means this could either go sideways or
Hmm.
down, but it's very unlikely for it to go up. Um,
Interesting.
so the price is clearly an upward channel, upward trend. But if you look at the RSI, it's kind of telling you a different story here.
Hmm.
It's telling you we might break down here, which is kind of my thinking. And if you just wanted to kind of back test that, like you can do this on any pretty much any chart. But like say this chart over here, let's just see like it's a clear trend, upward trend, and then look at that. So over here we made a higher highs, but I guess in this case, this final high over here was actually a lower high on the RSI and led to we kept making new highs over here, but it looks like the price um, the RSI was actually making lower highs, and which has led to a dump. And you can see vice versa actually if you look over here. Um,
I I have a question in your experience in looking at this for quite some time. Is when when can you see maybe to stop or to go heavier maybe into a trade or add more to an investment? Because obviously if the dollar is going down, it's it's cheaper. Usually equities are going up or commodities are going up. So when you see a bearish divergence, you can take an opportunity for that. So from that time, you see that second lower high. Um, what else are you looking at to maybe add to your position? Maybe like a double top or
yeah,
a
so
break in
yeah, so I
certain
mean,
trend.
typically you want to look for a double topping pattern or inverse head and shoulders pattern. This one is kind of like a rough inverse head. This one looks
Yeah.
more like a double top here. That means price went up to its previous high, and instead of making a new high, it
Yeah.
rejected. So in this pattern, what you would want to see for this to continue is you would want to see it break above the previous high,
Okay.
and not only that, you want to see it go up as a measured move. So you want what you want to see here is this measured move complete. So you take the bottom of the cup to the top. You want to see a move like that. Um,
Yep.
and then you want to see actually the price come back down after. Test that trend line and then move higher. That is the confirmation of when to add. So you would add here. So roughly speaking, this would look like maybe something like that maybe. That's when
Right.
so
Where it's most expensive.
yeah, so you
I
don't
can.
want to buy here. You would want to wait, maybe sell here, buy back in here, or and then
Hmm.
put your stop down here to go long.
So if you're doing forex and you're doing like USD or British pound GBP USD, you'd want to short that.
Yeah, yeah.
In
So
in this case, in
yeah,
this case, I
exactly.
see I see something else just on the fly, right? Um, you see where what we're looking at right now, there is one, two, three touch points on that upper trend line, the bottom trend line.
Up
If you
here,
go to that third one, if you go down on the bottom one, the bottom trend line, don't
this
move
one.
it. Yeah. Go to the next one to the right, upper right. See right there. Can you draw a trend line to draw a trend line there. And where the next one in and where you see the first intersect. Go down, move it down on that red bar, that tail on that red bar. Yeah. And move it. Yeah. Right. Stop right there. Now, when that broke, that's an opportunity there
Yep, yep,
to short something.
yep.
If you missed that, you can support, you can short the midpoint where it is right there, or add to the short
Exactly.
to the downside. That
Yep.
that 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 pivot point in the middle of that V formation.
Exactly. So you want to see obviously test of the support line, and then after that you're looking for RSI divergences, bullish bearish divergence here, to
Right.
see okay, this might be a time to switch, maybe even
Yeah.
go short. So that what we see
Yeah.
here is what I'm predicting is actually going to happen
Now,
later.
Kaizen, that's something that I learned pretty recently. And because my overall general trade setup is trend lines and support and resistance of those trend lines, in addition to horizontal support and resistance to also so breaks of that.
Exactly.
Yeah.
So you
Oh.
can see here we got another bearish divergence. So on the monthly chart on the dollar, so we got a higher high,
Hmm.
higher high, higher high, higher high, lower high. Bearish divergence. Trend is going to change. We broke below the 50. We broke
Hmm.
below the 50. So once you break below the 50, look at it it broke below, tried to get back above, broke below again, tried to get back above, and now we're breaking it for the third time now. So I think the dollar is
Look
dead.
at that.
I think the dollar is dead. And if you zoom in, I mean, right now, if you look at the dollar, Rich, the dollar is doing terrible, right? In this pre trading, at least it's down.
Oh yeah, we was looking at it on Friday.
Look
It
at that.
was
This is
going
today.
up. It was tanking. That's where I think I got in on that big red bar that goes down. I was in before that. There was resistance.
So right here,
What are we on?
this is
We're
the
on
daily chart.
the
So
daily
this was
chart.
this
Oh,
was
that's the daily
Friday.
chart.
This is Friday
Okay.
right here.
Yeah.
So this is right now.
Yeah.
This the dollar is down 0.40%. Um,
Oh, wow.
yeah, it's down a lot.
Oh,
You see the dollar? Are you looking at the dollar on your other charts? It's down pretty bad.
yeah.
So that I mean that's why
Dollar.
silver is going up right now.
Yep.
Gold and
I
silver.
see it.
Yeah, bro. And I have another chart. Maybe I'll show you a different day. But I have like a pennant kind of drawn. You remember I sent you that pennant on Friday, Rich? We completely
Yeah.
broke below that pennant.
You
And
you should see the hourly.
here, let me. I just want to screenshot it and send it to you because I'll screenshot my chart. Can I bring this up here? Is it gonna let me? Okay. So this is my screenshot of my Thinkorswim chart. This was
Yeah.
Friday. Um, we made higher low. This is a bear flag formation. So you just mark the highs. It gets resistance, resistance, and then there was a
Yep.
clear wipeout here. We dropped down. We couldn't get above this 97.8 level, and we got rejected. And look exactly where it converged, Rich. Look
Yep.
exactly where it converges is where we see
Yeah.
this massive move. So I mean,
Yep.
these things, the technical analysis works. I mean, you can see if
Yep.
you were patient for a good move. I mean, I kind of was already anticipating this, but
Uh-huh.
based on the bearish divergences on the larger time frame charts. But
Yep.
you can make some serious money here, and um,
Yeah.
if you go long on silver or gold, they're inversely correlated with the dollar. So as the dollar
Yeah.
drops, you're gonna make money on silver and gold. So
Yeah. Especially of breaks and finding your A plus setup because I guess we can go into more detail on
mm-hmm.
a future episode of the amount of you want to either trade or invest in. I swing trade. I do invest, but I'm in this position that I have to make a regular income out of it, but I also have long term swing trade. For those that don't know, is you're holding it overnight, but you do have price targets because sometimes price targets will happen that very day.
Mm-hmm.
you know, but then um, you got an A plus setup. You're you get an idea of how much to put in. My thing is a 10x leverage. Um, some companies that the way I was taught, you break it up into tiers, whether it's between 1, 2, 3, and 4. 4 is all in, um, and whatever that all in is to you, um, you break it up. If it's an A plus, all in. If it's a B plus, maybe it's tier 2,
Mm-hmm.
or you can or a C plus is like a tier 1.
Yeah, yeah. The goal is to manage your risk.
Yeah, yeah,
So you don't want to go on heavy. You don't want to C trade. You want to save that for the A setups. Save that for
right,
the big
right.
trades.
And we'll
Um,
go into more details,
yeah,
as on a future episode
yeah.
with that. Yeah.
So the next chart we'll look at is the Bitcoin versus gold chart because Bitcoin is supposed to be, from what I heard,
Oh,
it's supposed to be digital gold.
I
So
really like your pairs. I love it.
yeah. So I mean, is Bitcoin acting like gold? I mean, it looks like Bitcoin is actually more correlated with the Dow Jones than this. And actually, before we go into this,
Oh,
let's do the
you might
detail.
want to zoom in this so we can
Yeah, let me. Hold on.
see the bars a little clearer, a little thicker.
Like this. Can you see that nicely or?
Yeah. I'm okay, but I'm thinking of the audience. Like,
Oh
can
yeah,
can you see it?
yeah. I still don't know how to use this platform the best. Okay, let me see that. Maybe that works. I wish I could had a little bit more experience with this platform, but
Oh, I can guide you. If you put
but
your
you can see.
cursor down, if you put your cursor down in the middle, go further down, you're gonna see a plus sign in the middle of
Plus
your chart.
in the middle of my chart.
Yeah, right in the center, and then go down.
And add, what do you want me to?
Oh, you're on the right. Go to the center, and then go further down. Go down, bottom where the RSI is.
Uh-huh.
Oh, it doesn't do it. Oh, yeah, because there's a way how to zoom in and zoom out. Not RSI like the actual chart itself.
Oh,
Yeah, that's right. I've been doing this for a while.
yeah, I need to get my skills
Oh,
up. But for now, I'm manually doing, and in my own time, I'll kind of figure out the best way to stream
yeah.
this. But
Okay.
yeah, so I mean, this is the Dow Gold ratio. Before we go into the Bitcoin Gold ratio, I kind of want to look at the Dow Gold. And long term, I'll keep it short, but I mean, over time, over my lifetime at least, it's actually, I was born in 1999, so in 99 you see where was Dow Gold ratio at, meaning how many Dows does it take to buy 1 ounce of gold, how many gold does it take to buy 1 ounce of the Dow.
You were born in the 90s?
99, yeah, right before the cutoff,
Wow.
before it wasn't cool anymore. All the kids after me aren't cool anymore. But yeah, I mean, look at
I'm
this.
gonna fake it that I was born in the 90s too, man. So I'm gonna fake it. But I already said that I'm close to retirement, so I already gave it away.
Well, if when I was born, you saw this Dow Gold ratio and you sold all of your stocks to buy the gold, you would
Yeah,
have timed it perfectly because that was literally the high. And
yeah.
since I've been alive, it's been actually better despite all the news about the S&P 500 and
Uh-huh.
Dow Jones. It's actually been better to be in gold my whole life.
Wow.
So if you go to the, let's say we go to the 3 month chart because it's kind of like a longer term chart here. I mean, we don't see actually any bearish divergences here.
Hmm.
I guess there's technically a little mini one right here. So
Hmm. So each bar is what, 3 months?
each bar, yeah, each one of these bars, sorry, yeah, each one of these bar is 3 months. So I mean,
All right,
yeah, I
so
mean,
that's a quarter.
you actually
Okay,
do
gotcha.
get a bearish divergence on this quarterly chart. So yeah, so we can see we got uh, yeah, so yeah, so we got a higher high right here, right? But if you look
Mhm.
down to the RSI, we actually got a lower high. So there is a bearish divergence here. And
Yep.
if you spotted this on July 1st, 1999, the year I was born, you would have
Wow.
seen there's a bearish divergence here between the Dow and the gold in ratio. So if you
Okay.
sold all of your Dow shares for gold, you would be up, what's this, 45? And this was the ratio was at 45 and now it's at 9. So what's that? 45 divided by 9. I should be able to do that in my head, but that's 5 times. You'd be up 5 times on your money right now if you sold all your Dow for gold. So whatever gains you made in the stock market, you'd be
Yeah,
up 5 times as much. Isn't that crazy to think?
it's
Um,
incredible.
but yeah, so right now it's best to one would say it's best to hold gold. And when
Mhm.
we look, I want to find out when's the next time to sell my gold for stocks. So
Mhm.
what I'm looking for is a bullish divergence in this chart, and I don't see any just yet. I think that we are going to break below this upward trend line
Mhm.
starting from
Mhm.
the 80s. So it's only based on two data points: the January 8 in 1980
I,
and July 2011. What were you gonna say?
I have a question. Let's say maybe one of our audience members sees this and they don't have any gold or silver, any analysis that you can give on where to start? Not financial advice, but you're talking as if you're yourself. You have no gold or silver, but you have technical analysis knowledge. What would you do? But not financial advice for anybody else, but for yourself.
Yeah, I mean, like if I was just starting and I wanted some gold, um, I would call up local coin shops, see what the reviews are, see what their prices are, and you want to
Hmm.
buy on one of these dips. We recently got a nice dip
Hmm.
in gold from 5,500 down to, or 5,600 or something like that, down to like 4,600 or 4,800. But so you want to wait for a 15% correction, 10 to 15% correction. You want to buy when it's on sale, and
Yeah.
check out
When
one
do
of
we
the.
go to when do we go to the gold chart, like the pure gold chart?
Yeah,
Let's take a quick look.
yeah. So gold.
Wow.
Look at that. That's a parabola. If you've never seen that,
Wow.
that is a parabola.
Let's go to a daily or weekly.
Yeah, this is a daily chart. This chart's a monster, man. I mean, if you want to be in an
Yeah.
asset, this is what you want to be in.
Wow.
And I mean, you can see it's cup and handle after cup and handle here. We just keep breaking like
Look at that.
cup and handle, cup and handle. It looks like we're about to make a new. What we want to see is a cup and handle here for him. So, and obviously, I mean, every time we see one of these new highs being made, like just, I mean,
Uh-huh.
on your charts, I encourage you to kind of just mark all the highs and see what happens. But almost
Yeah.
every time, it's like we break and
Great
we break
advice.
out and we come test. Like here, we break out, we come test right here, and then we break
Hmm.
out, we come test. So I wouldn't be surprised to see this break out above 5,400
Look at
and
that. Look at that recent dip to the prior one of the prior highs.
yeah,
That's
look
no
at that.
coincidence that it stopped there.
Exactly. It always does that. Like so, we want to see. We want to be buying on support. Um,
So I definitely recommend for the audience to always put it, not only draw the lines but put in alerts
yeah, and you can
that
see.
will email you or text you,
Yeah,
and you can take a look and evaluate.
yeah. Sorry. Um, yeah, and even like you saw Rich's chart, he's got a bunch of text on there, kind of showing his ideas. It's nice when your charts have all your ideas out there, so it's kind of easier to like visualize what the next steps are. You know,
Hmm.
but yeah,
Thank you, Kazan.
you're welcome. You know, gotta
Appreciate the head.
pay credit where
Appreciate
it's
the
due.
yeah, the shout out.
Yeah. So yeah, I mean, so we went over the Bitcoin gold. Gold Dow Jones gold ratio DJI divided by gold. And the next thing, I mean, wait, did we? I guess we didn't really. Okay, so we looked at the longer term chart. I want to look at the shorter term chart um, on this, and you can see right now. I mean, um, basically the last since when is this? December 2024. We've been in this downtrend with the Dow versus gold. And anytime we get to the top end of this parallel, we get rejected. And when we get to the bottom end, we typically bounce, more or less. It's a very rough chart here. But, I mean, the goal is to find when it's time to rotate between stocks and gold. And right now, it's preferable to hold gold because the Dow gold ratio is breaking down. So, but here we can see a very clear down move followed by a move up and consolidation pattern. That's what we know as a bear flag. Even though it kind of looks like a mini bull flag here, it's in a downtrend, so it's actually a bear flag. Um, and now we've had a strong move higher, and we couldn't hold above this and break out, which would be a change in direction. We're breaking down, so we're likely to continue the downtrend. I'd like to see a move to this lower uh, trend line
Okay.
And then if you were to zoom out, you see this upward trend line right here. Let me zoom out a little bit. I gotta make sure I'm looking at the other charts too. But yeah, on the let's go to the quarterly chart. The quarterly chart, yeah, that's that upward trend line I was showing you. So I think we'll have a move down to that trend line, and maybe that would be the next area of resistance for gold. But I think we still got a little bit of movement. If I go back to the daily to show kind of a percentage move versus gold, the Dow, to see like how much further we have to drop. So I'm thinking that's like a negative. So basically, the Dow is going to underperform gold by 20% is what I'm seeing,
Mm-hmm.
or gold is going to outperform the Dow by 20%. So that means that means gold could go up what 40% and the Dow can go up 20%, or the
Mm-hmm.
Dow can stay flat and the gold goes up 20%, or maybe they both crash and the Dow goes down at 40% and the gold goes down 20%. So either one of those is a good option for what I'm basically predicting. So
I know as a swing trader, I just want to be on the right side.
yeah, so I mean, I tell you what, if you're going long, you definitely want to be in gold over the Dow, just based on this pair trade.
Mm-hmm.
But yeah, the next pair trade is my favorite, or one of my favorites, which is this is actually gold versus silver.
Okay. Let's
Uh,
see.
Dow, gold, silver. I don't know why it's not populating. It's a little slow when I'm on the stream. Maybe it's because I got all these charts up already. But hold up, let me see if I can refresh this real quick. Silver, Dow, gold, silver. Okay. Yeah. So these charts there's money in these charts, man. There's money in these charts.
So, oh, this is interesting. Silver is starting to advance.
Yeah. So let's zoom out. I like to start in the larger time frames to kind of just get my head
Okay.
around like what's going on, what's the
So
macro.
each bar is a quarter, three
Yep.
months.
Each one of these bars is a quarter. Each one of these bars is 3 months. And you can see here, right? We got so we got a higher high here. We got a high in 91 and a high in 2020. But if you look
Mm-hmm.
at the RSI, this is a lower high here. So bearish divergence, meaning that gold is going to start underperforming silver, or silver is going to start
Interesting.
outperforming
Ah,
gold. So that's the macro. Now we can zoom in and kind of look at the micro, or the kind of the intra-week, intra-day charts, which is where the most fun
mm-hmm.
is. I guess we'll go to the weekly. It's kind of step it down. So, but yeah, we're in this rough uptrend, and there's a key. I noticed this is a really strong support and resistance line at like 65. Down gold silver ratio. Every time we break below, there's a kind of a strong move. You can see like 97 strong move down, 03 strong move down. We got rejected here. Or we pushed up strong in 08 and dropped down strong in 10 at 65. All at 65. So it's a very 65 is a really good level to determine whether you should be buying a gold or silver. If you're above 65, you probably want to be buying silver, and if you're looking for gold, um, more it's going to be better at gold at below
Mm-hmm.
65 ratio. I mean, I personally believe that the ratio will converge to closer to a 15-1, if not further.
Mm-hmm.
But baby steps for now, you know. Um,
Right.
so let's go to the daily chart here. And the daily chart here, you saw silver kind of have its massive run up, and we This is indicating that silver is dropping or outperforming gold. And after we saw its massive move up, and guess where we bounced? Bounced to the bottom of this range.
Hmm.
Um, and
Oh,
right,
is that a bullish divergence
bullish divergence. So
at the bottom? That's why it's advanced where it started to advance.
yeah. So yep. You're actually right. That is a bullish divergence here. So in the short term, this is negative for silver, bullish for gold, relative for the two relative assets. Because look, we got a lower low, right? We got a lower low, lower low. Why is it not letting me stop? Okay, lower low. But we actually got a low, higher low, wherever you want to draw this.
Hmm.
So that's a bullish
Right.
divergence. So if you saw this drop down, you're like, maybe I should go trade some of my silver for gold because silver looks
Right.
overvalued. I mean, you got that bullish divergence. Might be good to kind of get out here. Um,
I see something very interesting, Jabari. You
yeah.
see where in the chart itself, where you draw that trend line down, you see a lot of red, and then that last green part where it spikes up a little bit, that's where you can start your switching until you see another higher low on the RSI. Oh no, what I mean is now when it goes down to the bottom, you can start adding to your position more when it breaks above those green bars on the chart and forms a higher low on the RSI.
So you're saying to switch out when we get that higher low.
Which got to silver, yeah.
Okay. Yep. Exactly. And if I mean if we did that, and I didn't catch
Yep.
this in the moment, but had I did that, I would have pulled some of my longs off the table, um,
Mm-hmm.
and switched and stayed out until you kind of saw this spike up here. So
Mm-hmm.
what we want to see here is continued lower highs on the RSI, and it can. Remember, I said when we're above 50 on the RSI, we're bullish. So right now we are
Mm-hmm.
testing it. So if we were to bounce here, it might you might want to reconsider this trade.
Mm-hmm.
But I want to see this break below the 50 and on the RSI, and then come back down and actually test it once before coming back. So
Yes.
um, with this being such a strong support and resistance line 65, I'm pretty confident that we'll see a lower low and the trend will
Mm-hmm.
continue lower. But I mean, it's always important to keep this in mind. I mean, technically, I don't see any bearish divergence here. So I mean, and you got to keep in mind, bearish and bullish divergences don't always work, but
Yeah.
it does increase your probability of the trade for sure. So definitely
This is great.
keep this in mind. But
Great.
so right now, gold is better than Dow, and silver is better than gold. And what is better than silver? I'm gonna tell you. It is in my head is silver miners, and I
Um,
love this chart. I love this chart, and I'll show you why.
okay.
Because, and I'm gonna refresh this because it seems like there's a problem every time I go here. So yeah,
I'm gonna have to get think of swim, man.
this is Trading View.
No. Your account is think of swim. Where you buy the silver miners.
Oh, yeah. I mean, I use Thinkorswim for trading as well. Yes, or analyzing trades at least. But I mainly do use Robinhood and Webull.
Oh, really?
I should
Okay.
probably I don't really like Robinhood just because of what they did with the whole GameStop stuff. But
Gotcha.
and I wouldn't be surprised if they do that in the future with
Yeah,
altcoins.
I have multiple exchanges too also,
Yeah,
so
I mean, you don't want to
it,
keep all
it is
your eggs
good.
in one basket, like Plus, it's good to
It's
have
true.
separate accounts. Just in case you blow up one of them, you know you still have another
Yeah.
one. No, we
Or you trading one thing on one account and one on the other. That's what I do.
yeah,
I
yeah,
trade
exactly.
Solana on one account. I trade other things on another account.
Yeah.
You know.
So
Yeah.
yeah, but so here is a long term. I think it's good we start with the monthly, go to the weekly, and then go to the daily on each one of these charts, just to get the macro and then the micro. So as you can see here, this is silver versus silver miners. So as this goes up, means that it's actually better to hold silver over silver miners. And you can see there is a clear resistance at 3 or 2.95, however you want to call it. We hit that in January 2016. We hit that and March 20th, March 2020. We hit that in March 2025, and we hit it again in January 2026 recently. And every time,
And and overall, that's an ascending triangle, which is bullish.
yeah. So yeah, you can call this bullish. It is an extended triangle, but one thing I do look at um, is the RSI whenever I'm looking at
Hmm.
anything, because I want to see uh, if this trend is going to continue. Um, First of all, I would want to see a break above 3 if you want to hold silver over silver miners.
Hmm.
And I would also want to make sure there's no bearish divergences, which I do see bearish divergences here. So if you can spot it, we got a higher high right here. We also got a high here, and we got highs here. But look at this. So although the price is going higher, right here, right here, right here, these are all going higher.
Oh, the RSI is
Yeah,
going lower.
yeah, we got bearish divergences here. So that means
Uh-huh.
I believe this trend is going to change. I think that we are going to break below this line, this support line. At least that's what this is indicating. And
Hmm.
we're not going to see the real move until the RSI breaks below 50. So right now, which we actually just did, 49.27. Um,
Hmm.
so that's the monthly chart. So the thesis is silver miners are going to start outperforming silver. So I mean, the gold is outperforming Dow, silver is outperforming gold, and now silver miners are going to outperform silver, in my opinion or thesis. You there, Rich?
Yeah. Sorry.
Oh,
A technical issue
no
there.
worries. All right. I just want to make sure you're still there. So then I'm gonna zoom in just because of time reasons. We're already kind of a minute
Yeah.
in here
We're
for a
gonna wrap
minute
it up.
now.
Don't wanna be too long.
Yeah. So yeah. In short, I mean, this is the silver miner ratio. If you zoom in on the 1 day daily chart, meaning that each one of these bars is 1 day. So at first we had this downward trend, and then we bounced above support, started this upward trend channel. We were bouncing in here from the 25th, September 2025, up into a break into December 2025. So for a year we were trading in this channel, and we were above this channel from December 2025 till January 2026. So after a year of being in this channel, we only spent about a month in the channel, or a month or 2 months, I'd say, above this channel. And now we've broken back into the channel and below, and tested the support line below. So one thing I am seeing is that there is this bull flag above the trend line of this channel, and we broke out, and that we see this blow off top move. But I mean, something
Mhm.
really key here is you want to see if this move is going to continue. So I see a higher high, right? Um, and let's move this down. Yeah, a higher high here. Higher high, right? We got a higher high, but we got a lower high here. So bearish divergence. If you zoom in, not only on the monthly chart, but now on the daily chart. So So we got the monthly chart in our favor and the daily chart. So in my opinion, this is a very high probability trade. We broken below this channel. We formed a flag. We tried getting above it. We're in this downward channel that you can see it was actually providing resistance up here in this bull flag. And now we've actually jumped out of it. And look exactly where we stopped. So this is today, February 26th. Rich, are you there?
Yeah, I'm here.
Yeah, so we bounced out of this trend line, this downward channel. So I actually expect to continue this trend. I think we're going to see a lower low, meaning that we break lower here, which means that silver miners are going to outperform silver once again. But yeah, that's just my thinking. Obviously, you need the dollar to keep going down, but I think silver miners is the best place to be right now out of most markets, you know. But
Silver miners, but I'm loving the silver though.
yeah.
Appreciate you introducing me to silver.
I'm putting you on, you know. I'm trying to spread the wealth. We don't gatekeep here. Everyone.
Yeah, it's for our audience. You know, it's always good to have a trading/investment partner. You know, bounce ideas off. You know, one person might see something, the other not, and then vice versa. You know, cover all our bases. There's something that I've learned recently. I got my swing trading set up, and Jabari has his. We have different ideas that we share. You know, I've learned something from Kaizen that with pairs trading. You know, what should I be in? You know, I trade, and I'm looking forward to do some further analysis with that. Long-term hold in Solana and Ondo. But if one is doing better than the other, I'll switch up. You know, matter of fact, I'm going to do a pair with that. You know, yeah.
Nope. Yeah. So the goal of this is, like I said before, to kind of this channel is called Relative Edge because we're looking at relative values. We're not looking at values based in dollars. You know, I think
right.
As soon as I learned that, my mind kind of opened up a little bit, and it wasn't really long ago that I started using pair trading, but since I have, it's dramatically increased my efficiency, output, and I feel like my trades have been stronger, just because the dollar I think is a bad measuring stick. It's a melting measuring stick. So you should compare assets to assets, because the dollar basically it's a cloud that it's a mist that allows you to not really see as well. So when you compare assets to each other, you kind of see what's really going on behind the curtains. You know? So, but yeah, hopefully this was very helpful for you guys. This is, like I said, our first video, so show some support. So subscribe for more videos. I'm gonna be posting more content. Try to do Sunday wraps at 6 p.m. Try to make that more or less standard. And I'm gonna post during the week. Try to do different videos with regards to Bitcoin, gold, the Dow, silver, miners, everything. But everything's gonna be pair trading. It's not
right.
We might look at charts initially, but it's mostly gonna be pair trading. What was that, Rich?
Yeah. So in future episodes, being this is our first time, we'll include you know, we can review, you know, and trade setup for possible trade setups, swing trade setups for the week coming. You know, as the futures open at 6 p.m. In addition to crypto, their new, even though it trades 24 hours a day, their new day opens up at 7 p.m. Eastern Standard Time. Yeah. So, yeah, great information. I learned something, Kaizen. I gotta get used to calling your your alias.
Kaizen.
And this is Trader Setup TTS.
Yes, yes, we're making moves. We're making some moves. There's a lot of money to be made in these markets. So
Sir.
let's share the knowledge. We can all make it. The
Yeah,
goal.
who can say they made 21% in 24 hours in their portfolio
Yeah, that's a big number.
from Friday to Sunday.
Yeah, that's a something to be proud of. Like you set up a
Yeah.
trade, you hit your stops. It doesn't have to. You don't got to be in the trade the whole time. You don't have to be in the trade for that long. You can get in and
Yeah.
get out and get your profit, and then reevaluate, and then get in when the next setup comes. So
So Kaizan, I see you in Dubai in December, man. End of the year when we look at all the games we got. See you in Dubai or somewhere by the beach somewhere.
yeah. I think it's. I mean, I believe in myself, man. I think very highly of myself, and I know it's only a matter of time before I hit 1 million. And what's the most important is that the people around me hit 1 million. So
Yeah,
that's what real wealth is community. So yeah,
absolutely,
I can do
100%.
I can do it all day, but can I help other people do it? Is where
Yeah.
is that's where the relative edge is.
I, I'm gonna try and stick to the percentage. I don't want anybody to know how much I'm making. I'm gonna tell them percentages because that's relative.
Yes, yeah, is it
That's all right. You do what you do, man. I'm gonna say percentages.
as long as my account is going up more than it was yesterday,
Yep.
relatively speaking, I'm happy. No, it's even
That's
if it's
what's up.
as long as it
There's
doesn't
a
go down, honestly, I'm pretty happy.
Yeah, man. There's power in compound percentages.
Yeah, yeah, big time.
It's incredible power. And maybe I'll share it in our next episode, starting at $336 and 18 cents. How percentages can compound percentages can really explode.
Yeah, yeah, that would be good if you want to set something up like that. It'd be
Yeah.
good, and yeah, I want to open this channel up to any type of analysis. Like we can start small, maybe do a baby account, and
Yeah,
track that compound interest. Like
absolutely. I'm open to um show my percentage gains. I have a just a preview percentage plan. I plan on a monthly basis by week. I plan to in that month on a base scenario make 30% in a week and then take less risks on the preceding 3 weeks remaining in the month to make 15% each week the rest of the month, which will add up to 100% of the entire portfolio. So you're talking about doubling your portfolio by the end of the month.
there you go. Got some big
Yeah.
goals in mind. We're gonna hit them. We're gonna keep each other
Yeah.
accountable. We just gotta every day
Yep.
Kaizen. Every day improving, getting slightly better.
Yep.
We're not happy with after you did something good. You forget about it. You learn from it, but we don't.
Yep.
The goal is to do it again.
Yeah.
And
And that's just a baseline because I just made 21%. Maybe, next week I might make another 20%. It'll add up.
Yeah, next week I'll make 22%.
Yeah. That stop. Look at stop right at the penny, man, to stop me out. And that silver kept on going. It went above, hit the liquidity point, went above pivot resistance 1, pull back a little bit right now. But yeah, it's all good.
Yeah, I mean,
All good.
I wouldn't be surprised to see it come back to that level you got stopped out at before it next
Yeah.
move higher. I mean, or it might just continue higher. I don't know, but
You never know. I might trade it again. I might trade it again, depending on the liquidity on the downside and the upside, and see where it is. If it's more to the upside, it should drift up to the upside, especially with the bullish analysis.
Yeah.
But anyway, Kaizan,
It was great.
this is Trade the Setup,
Yep.
aka TTS. We look forward to seeing you next time. Comment, subscribe, share.
Yes, yes. More to come.
And it's gonna get even better. It's our first time.
Exactly. Yeah, yeah. We're gonna keep improving. So
Yeah.
tune in and show some support. Definitely put some comments. Tell us
Okay.
what we can get better. But we'll be
Yeah.
back. We'll be back.
Yeah.
You know? We're here for you guys.
Yeah, we welcome any advice for
Yes.
improvement.
Yes. All right. You guys have
All
a
right.
good one. All right. Talk to you later.
All right. All right. Peace.
Peace.